Purpose of this cash flow statement is to identify sources and uses of cash during the year. Net cash is the sum total of cash flow from operations, cash flow from investing, and cash flow from finance. Cash flow is divided into three parts. 1. Cash flow from operations include all the transactions and other events related to its earnings process. Cash inflows include generation of funds in normal operations. Cash outflows include expenditure of funds in normal operations. 2. Cash flow from investments include all the transactions involving acquiring and selling long-term investment, property, plant, and equipment. Cash inflows include sale of plants and equipments, liquidation of long-term investments. Cash outflows include purchase of plants and equipments, investments in long-term investments. Number 3. Cash flow from finance include all the transactions like issuance and repayments related to equity holders or the debt holders. Cash inflows: debt issuance, common stock, preferred stock, and other securities. Cash outflows: retirement of debt, common stock, and preferred stock, payment of cash dividend. Let us now look at the cash flow statements in case of Karthik. Case study 1. Revenue of $1,000 earned but not paid. Transaction classified as cash flow from operations. No cash impact. Case study 2. Revenue $1,000 earned but not paid in December. Since we are making a cash flow statement for the month of December, there is no cash impact. Case study 3. Expenses of $400 was incurred but not paid. Classified as cash flow from operations. No cash impact. Case study 4 consists of two parts. 1. Interest expense incurred but not paid. Classified as cash flow from operations. No cash impact. 2. Loan received from bank. Transaction classified as cash flow from finance. Cash inflows as $20,000. Case study 5. Karthik infuses his own capital. Transaction classified as cash flow from finance. Cash inflows as $20,000 again. Case study 6. Karthik purchases truck. Transaction classified as cash flow from investments. Cash outflow of $14,000. Case study 7. Karthik prepays insurance charges. Transaction classified as cash flow from operations. Cash outflow of $1,200 again. Case study 8. Karthik bought $1,000 worth inventories. Transaction classified as cash flow from operations. Cash outflow of $1,000. Case study 9. Karthik's client prepays. Transaction classified as cash flow from operations. Cash inflows as $600 again. Additionally, SG&A expenses paid by cash. Transaction classified as cash flow from operations. Cash outflow of $30. Cash flow from operations is $1,630. Cash flow from investing is $14,000. Cash flow from financing $40,000. Net change in cash is equal to $24,370. Also, ending cash is equal to cash at beginning plus net change in cash during the period. Cash at the beginning is equal to 0. Net change in cash during the current period is equal to 24,370. Ending cash is equal to 0 plus 24,370 is equal to 24,370. This flows into the balance sheet as cash.